All right, it is 8:58, and today is February the 4th, 2021. Welcome to Diamond Ethical. Today's one of our trainings. So, without any further ado, we're going to be discussing understanding business credit and building business credit. So, this is how to get up to $100,000 in business credit card without a personal guarantee or personal credit check. Now, guys, this is for you guys to understand it and present it as one of your arrows in your quiver to your clients or your clients to be or whatever the prospects you have. So you obviously probably understand consumer credit. Well, it is credit as linked to you personally based off of your social security number. Business credit, on the other hand, is just another type of available credit for business owners, to use and grow their business. However, business credit isn't linked to you personally. Instead, it's linked to your business based on your employer identification number. We always talk about the EIN number because this is about business. So what are some of the benefits of having business credit? Well, the EIN credit gives you a ton of benefits because you can build it quickly and faster and bigger, getting approved for vendor credit right away. You can get store credit within 90 days and even cash credit, credit that you can cash out within 6 months or less. It could be less, okay? So we usually have a way to expedite it for the clients. Now, it is not connected to your personal credit, so you can actually get approved without a credit check, and this is true. So no credit inquiries involved as it doesn't report to the consumer agencies. It reports to the business credit reporting agencies. So in other words, your credit score wouldn't be impacted by the inquiries when you apply for business credit. As per the Small Business Administration, business credit card limits are 10 to 100 times that of personal credit. So if you have like 100, let's say you have $100 in a personal credit, multiply that at times 10, that you could have 10,000 as a credit limit for the same store. Okay, so you can get a lot more money using business credit. And this also means that you can have personal credit cards at stores and also have a second card from the same store with a higher credit limit just for your business. It's amazing. And you wouldn't need collateral, cash flow, financials to get business credit, which is amazing. So almost all lenders look at your business credit to determine your approval for business loans. So anyone who wants to can actually easily and cheaply find a business's business credit profile. And these include the following. Your client can find it, your prospects can find it, even your competitors can find it. So when done properly, you can actually build business credit with no personal guarantees. So in other words, you're not liable for business debts in your business. So having business credit also increases the value of your business. This is something so many business owners don't even know. It makes it easier for you to sell the business when the time comes. So most businesses, they already start a business thinking that it will stay forever, but eventually, as things happen, life happens, they want to sell the business. Well, if you have business credit, it makes it a lot easier to sell the business when you have that. Most importantly, every highly successful business in the United States has business credit. Facebook, Walmart, Microsoft, Apple, name them. They all have business credit. So you don't need to be big like these guys to get business credit, thankfully. However, you do have to have business credit to get big. If you're intending to go big, you do need to have business credit. So how not to build business credit? Well, you can't start by going to your banks or stores just like that to apply for business credit. Nope. For example, if you go to Staples with absolutely no credit established, you get denied automatically. Okay. If you also go to your bank to apply with no credit, you already know they'll turn you down. But if you go into the bank or the stores with a well-established credit profile, you get approved, of course. So the key is not to apply until you have your credit built. I know it sounds strange. Well, you need credit to get credit. Yes, both on business side and consumer side. It's crazy, but it's true. So on the consumer side, we'll explain. Most use secure credit accounts to build their initial credit on the consumer side. Now, in the business world, it's a little different. We use vendor accounts. Okay, instead of consumer accounts, we use vendor accounts because trade vendors will give you credit with a net 30 term that reports to the business credit reporting agency. Now, net 30 means that let's say you get $100 from the store or from the vendor. They require you, if you use the $100 in a month, they require to pay it back in 30 days. You cannot go past that. Otherwise, you get a negative report on your business credit. So within 30 days, you are required to pay back whatever amount that is the vendor has lent you. So that's what net 30 means. So before you start applying, the first step is you should set up your business properly. We talk about it, guys. Tell your clients you need to set up a business. That's why we have the incubator. So when the client has had their credit established, the credit is reviewed and it's used as the main source to determine approval. So when the client have had the credit established, it's the information that they enter on the application that is actually used to determine if they will be lending money. That's why the first true step of building business credit is to ensure that the business is set up properly or credibly, to meet the credibility factors or lending guidelines before they actually apply. So by doing this, they can actually ensure that they meet the credit issuer's approval standards before applying, dramatically increasing their chances of approval. So take a look at the things that some lenders and credit issuers look at to ensure that a business is credible. Well, they need to have a good business address. We talk about it all the time. The business address is extremely important. It should not be a PO box. It should not be a home address. Now, you can work from your home, but have the address somewhere else, okay? Work from your home, have the address somewhere else that's credible, an actual commercial address, which we can help them with. We have the incubator, we have the incubator program. So the other thing is to have a phone number, not that is not a cell phone or home phone number, but a business phone number. We're talking about the line, the business phone line. So let that line, you can be forwarded to your personal credit phone number or cell phone number, that's fine, but let it be a separate line, not the same cell phone line you use to answer personal calls. No, your website and email should be professional. We talk about that. We can help them with that in our incubator program. We'll create the websites for them. We'll set up the commercial address for them. We'll get them a phone number in the incubator program. But anyway, we'll talk about business credit today. So if they're in a licensing industry, they should make sure to have the license ready. And they should get their EIN number and the entity set up and their business bank account established, okay? So the business bank account is extremely important because that's when the lender sees that they started their business, not when they register the business with the Secretary of State, but when they have a business, bank account. So the business name should be the same. We talk about it on all documents, including licenses and DBAs. They can have a toll-free number. We're not saying it's a must, it's not a requirement, but it's good practice, and a fax number. Basically, every field on the application should reflect that the business is highly successful and established. Remember, we talk about the perception of credibility. So what we're doing with the client is creating a perception of credibility before the lender. So when the lender looks at them, they see them as credible. So remember, this is what is solely looked at to determine the client's approval rate so that their business is represented in a positive and credible light. That's what I'm talking about. Perception of credibility. So step 2 for the client is now that they've established that the business is set up properly, now they can qualify for new credit that is reported to the business credit reporting agencies. But there's only a few, very small number of vendors that we know would actually approve you at this stage. So at this stage, you can only apply for what we call startup vendors. The client can only apply for startup vendors, and they will actually require the client to purchase something first. Remember, you need credit to get credit. Well, they want to know that this person is serious. So they have to purchase something first, and then the startup vendors will give them a credit in line. So some of the startup vendors are Quill. You can look him up. Uline, you can look him up as well. And Reliable Office Supplies, you can look him up as well for the client. So all of these will require the client to place about 2 to 3 orders first before getting a net 30 credit line. Remember, we talked about net 30. While applying for credit, They can apply, they get denied. So we recommend that they purchase about $50 worth of items and try again and try again. About a third time on the application, they will get approved for the net 30 term of credit line. Some of the other starter vendors include we have Laughlin and Associates. Now, this is an actual company, okay? They are a vendor that give trade lines, credit lines. So the client would have to apply for this as well. We have Monopolize Your Marketplace. Now, this sounds like a term, but it's not. It's an actual business name. Monopolize Your Marketplace. You can look it up. It's an actual business. So these vendors, startup vendors, will require the client to purchase the service first. Then they'll finance them, those services to give them a net 30 term of pay credit line. So the benefit is that they won't have to, order, they must not place the order 3 times. It's not a must, but we recommend that they do about 2 to 3 times. So the drawback in this is that, of course, they'll have to buy stuff that they might not need or want just to build the business credit to get it started. So they spend about $50, $20, $30, something. So once approved, they would use that credit, of course, like let's say $100, and they need to pay it back within the 30-day period. So once they pay it, their accounts will be reported to the credit reporting agencies, the business credit reporting agencies. Remember, we have the personal credit reporting agencies or consumer credit reporting agencies, and then we have the business credit reporting agencies. So this will report within 30 to 90 days or 3 recycling accounts, I would say. So at this stage, the client needs to have about 5 starter vendors, 5 starter vendors to get approved for what we call the store revolving credit accounts. This is why it boggles down the clients. They don't want to do it themselves. And that's why we're in business, because we can do all these things for them, right? So we tell the client, do not apply for store credit right away or cash credit right away unless they have about 5, store credit accounts or not store credit account, but starter vendor accounts. So step 3, once they have the 5, now they can move on to what we call the store revolving, credit cards. These are just like normal store credit cards that are custom, that clients usually know and use. We have Best Buy, Amazon, Walmart, Lowe's, all the stuff, and most other retailers, even Home Depot and Staples will require, because they're a bigger company, they usually require the client to be in business a little bit more. But we have a way to expedite it, by the way, guys. But this is some of the things that a client can do to build their business credit. Most sources do not have these requirements if they have, trade lines or scores established already. So most businesses or like big retailers will not require them to have, more than 5 or so. So the keys to store credit are having established trade lines that are being reported on the business credit, okay? So the client must have a credit profile established, a business credit profile established. Then if they can get approved for revolving credit, they should go ahead and apply for that. Now, step 4, remember, they should have 5. The first one is to get the business set up. The second one is to get about just a starter vendor. And the third step is to get about 5 of those vendors. And the step 4 is to get about 10. Once they get to 10, then and then only they can start applying for real cash credit cards like Visa, MasterCard, Amex. You guys hear about businesses running around with Amex cards, right? Well, this is what it is. It's a business credit. Amex cards are bigger. They're bigger limits on them. So, you could use them for business, do whatever you want to do with them. But it doesn't affect your personal credit, just the business credit. You're not liable for it personally. So the client should also have store credits about a total of $10,000, high limit in order to apply for these real cash credits. Dell is a good source of this type of, limit approvals. We have all the sources that we can, apply for the client, which we already doing. So cash credit cards, they're usually more difficult to find. They're more difficult to find. And, but Home Depot is a great source as well. Sam's Club is a great source of it as well. Racetrack, you guys can look it up, is an actual company. It's like, I think they're like a gas station or something like that, But Racetrack, they offer fleet cards for trucking companies. We can help them apply for and all that. Those are like cash credits. So once they're done, and they can even check with the banks, by the way, if you guys don't know. But once they're done with establishing about 10 credits, now we're talking about, depending on how good they do building the credit, they can get up to 250,000 actually, total of business credit. It's amazing stuff. So the approval limits, will mimic, their other accounts, which they shouldn't apply for until they have a revolving store credit with $10,000 limit or higher. It could be higher depending on the type of business. Like truckers would have higher of those, So just keep in mind, the client should not apply for any of this credit or put their social security number on the application. This is something we train clients on doing. Once you're applying for business credit, do not put your social security. Otherwise, they'll pull the credit. They'll pull your credit and make a decision based on your personal credit. But if you don't put a personal credit, you're not guaranteeing it. And your business is what's going to be pulled up, the business credit. So no matter how much credit the client builds, they'll still, always get applications. Like lenders will always have applications to ask for their social security number. It doesn't matter. Now, if they're needing a higher amount of money, they might be required to put the business, their social security number. If they're looking for like thousands and hundreds of thousands of dollars and millions even, then the social security will be required to put in. But if you're looking for up to 100,000 or even up to 250, most of the time you don't even need to at all. So we require them tell them not to until the lenders say, yeah, you guys must put it, which they're not. By law, they're not required to do that generally. Okay. So it is still needed for bank loans, the social security number, or larger credit lines, like I just said, that the client might apply for, but it wouldn't be needed to get them, normal business credits, even with high limits, okay? So building business credit fundamentally, it's similar to building a consumer credit, but it's a lot easier and a lot quicker and a lot bigger. So if a personal credit could get up to 10,000, business credit could get 10 to 100 times more than that. That's how amazing it is for the same store or for the same lender. So start building business credit with vendor accounts is what we advise our guys, our clients start building if they want to do it themselves. If they want us to do it, we do it. Now, by the way, the reason we're teaching this is an arrow in your quiver because it's part of the Access to Capital program that we don't charge for. If you go and look up how to build business credit, most people, if not all of them, charge for building business credit for you. We're talking about $1,500 to about $2,700. But we already put it in the Access to Capital program for free. We build a business credit for free. So, and remember, there's no upfront cost for the Access to Capital program. So it's pretty amazing. So once they report it, they have a credit profile built and the score, business score, credit score built. Then they can apply for revolving credit. This is just a reiteration. Finally, they can actually have up to 10 trade lines and then apply for cash credit. We have a way to expedite all these things because part of what we do is co-sign it. It's very risky, but it depends on the client that we're working with. But we usually co-sign it to give them more boost to accelerate it. It's a little risky, but we have to do it based on trust. We have to know the client very well and trust them to do it expedited. So they could do all these things. We advise them not to put a social security on the application, just the EIN number on the application, so that they will be the lenders will be able to pull up their business credit profile and tell if they're credible enough. So that's it for today. I thought it was going to be a lot longer. So we have question time. What questions you guys have right now? And if you have questions, just reach out to us maybe in the next training or so, or over email when we answer your questions. Okay. All right. Well, let's see. So you guys have a blessed day, and we'll see you guys next training.
All right. Thank you.
My pleasure. Bye-bye.
Bye.